What's going on, guys? In this video, I'm going to show you the difference between a market order and a limit order. I had someone leave me a comment, the difference between both market and limit order in one of my older videos, which you could watch right here. And I really want to take the time in this video to explain the difference because it's very important that you know the difference and to make sure you're putting in the right order. We're going to be using my favorite brokerage account, that is TD Ameritrade. I'm going to walk you through the steps, not only how to set up both a market and limit order, I'm going to show you on the computer exactly what the difference is and why it would be advantageous to use one or the other. Now, of course, before we dive into the video, guys, make sure to smash that like button and subscribe if you haven't already. And drop in the comments below if you are a day trader or a long-term trader. I think it would be interesting to see exactly who's clicking on this video. All right, so before we jump over to the mobile platform of TD Ameritrade and I show you how to set up limit orders and market orders, we're actually gonna jump over to the computer. And as you see right here, I have TradingView open, a stock. The stock I picked right now is Adobe. And obviously the market's closed, but we're going to go into the 5-minute candle chart. We're going to pretend it is not closed. I'm going to show you exactly the difference between a market order and a limit order. So here's the stock trading. You can see it's kind of bouncing around between $450, $460. And say you want to buy into Adobe. So you could set a market order, hit buy, and then what will happen is your order will fill instantly. That's what a market order is. It doesn't matter what the price is, if it's going up or down, if it's $460, $461, it's just going to fill right away. Because on the other end of the trade, if you're trying to buy, you have someone that's trying to sell that same share to you. So you are practically standing there saying, hey, I want to buy a share of Adobe or 100 shares, doesn't matter. I want to buy Adobe. I'll buy it for whatever price. It doesn't matter. Because you're looking at the chart and you're thinking, 460 is okay. I'll buy it for that. Now you might think, that's fine. I'm looking at the chart. Why would I need to put in a limit order? Well, that's because there's something called a spread. And with a quick Google search, what is the spread in stocks, or what is the spread in stocks? We'll give you a quick description, which pretty much sums it up. It's the difference between the lowest asks and the highest bid price. So here's an example. If the lowest ask price is $25 and the highest bid price is $24.75, you have a spread of 25 cents. So what this means is people who want to buy the stock want to buy it for $24.75. People who want to sell the stock want to sell it for $25. So that spread of 25 cents will really determine on where your order will fill. So if you're putting in a market order, even though you have everyone else asking for $24.75, you will get filled for $25. You're saying, I don't care what the spread is. I'm going to buy it at whatever price. You might think, what's 25 cents? But that's per share. So if you are buying maybe 100 or 1,000 shares, that could add up. Take that 25 cents and times that by 100, or take that 25 cents and times it by 1,000. This is where limit orders come into play and why limit orders can save you hundreds, if not thousands of dollars in the long run. Let's jump back to TradingView just to show you the example. So here's Adobe again. And you can see right now the stock was trading down and it closed at $458.39 or right around that. So if you went into this trade with a market order, you get filled for that right away. And with that spread, sometimes the spread could be much bigger than our example of 25 cents. You could have some stocks that have $1 spread or even more. So even though you want to buy the stock for maybe $458, you might get filled at $460 or $465. There are some rare cases where the spreads could be really big and you're losing out on a lot of money that way, especially if you're a day trader. So what are limit orders? Well, limit orders is you're putting in a predefined price. We'll say you want to buy the stock, let's zoom in, at $458. Let's see if I can get that. We'll just do this. And if we click on this, we can actually change it. Here we go. $458. That's exactly what you want to buy in for. There, you want to buy in for $458. So what this means is you're setting up that limit order and it will not fill until it reaches that price. So even if the ask price is $458.77, your order is not going to fill until finally someone on the receiving end is saying, okay, I'll take $458 for my shares. So that's why that is super important. You won't have these crazy spreads. You won't get filled. It's called slippage. You won't have this crazy slippage by setting up limit orders. And this is good for when you're buying a stock or selling a stock. Either or, you always want to practice with limit orders. Now, again, some of you may want to just get into the stock and you don't want to miss the chance of losing out because there's no promise that the stock will go back down to $458. It may very well, if we want to zoom out, the stock may very well just go like that and miss you, so you never get filled. And I get that. That could be frustrating. What I would recommend for that is even if you just have the limit order a little above what the price is, that's still protecting you in the long run. You're still saying, you know what? I'm okay with what the market order is right now. I will go into the market price, but I don't want to have this crazy slippage. I don't want to open up saying I'm good for a market order and you have a seller on the other end trying to overcharge you for the stock and you get filled for that. That's when the crazy slippage happens. You can still prevent that by having the limit order a little above what the current market price is, so you still have a guaranteed chance of being filled. All right, so now that we're done with the video, I'm going to move over a little bit so we could pop up my brokerage account. This is TD Ameritrade, and if you like the dark theme, you can watch one of my other videos. I show you how to change it to dark theme in the settings. But let's jump to Adobe because that's the example we've been using. I'm going to hit detailed quote, or I don't even need to hit detailed. I could have hit add to position, but we're going to go up in the corner where it says trade. I'm going to hit trade. Now, each brokerage account will be a little different with the settings, but at the end of the day, it's still the same thing. You're changing your action type, all of that good stuff. So we have our action. We could buy or sell. So we're going to hit buy, and here you go. You have limit, market. You have other ones below, which I'll put that in another video, but right now we're just focusing on limit and market orders. So if I hit market order, you see what went away. I don't have the choice to choose the price. This is saying I don't care what the price is. I just want in. If I buy 100 shares, it's estimating at the bottom that it's going to cost me $45,000. That's an estimate. Let's drop down to how about one share because I don't have $45,000 in my account sitting in cash right now. But let's just say one share. So it's a market order. It says fill it for whatever the price is. If it's a 458, which is what it's estimating it could get filled for that, but it doesn't have to. The market on Monday could open up at $470 and I'm getting filled for that. And maybe that's not part of my strategy, but let's hit review order. Let's hit place order. And then there we go. Now you see open market. It's going to buy a share regardless of what the price is. So now let's go back and we're going to do trade. And now we're going to do a limit order and we're going to see the difference here. So same deal. We're going to say one, not 100. We're going to say one stock, but instead it's going to be limit. And you can see now we have a new row. We have this row where we could determine the price. So we could keep it at 458. And what this means is if it's a penny higher than $458, don't buy into the stock. I want to buy in at 458 or lower. So let's say the market opens and the stock is $450. It'll fill me for that price. Now, don't think you putting in a limit order means you're going to buy it at $458 no matter what. As long as it's below that, that's our limit. That's where they get the name from. As long as it's below that limit, it will buy it. So I want to make that super clear. You put in a limit order. It's saying buy it for this price or better in your favor, not the seller's favor. So we could lower this. We could say, you know what? I don't want to go in unless it's $457. So let me buy in as long as it's $457 or better, which means lower because we're buying the position. If I review order, it's going to look the same. I could hit place order. And there we go. Now you can see both the types. So we have the market order, which it doesn't say any price. And if we look at the limit order, it says limit of $457. So the market opens up at $460. My market order will get filled. My limit order will not. Say it opens up at $450, both of them would get filled. Now, that's buying. We could do the same thing selling. So let's say we wanted to now sell a stock. So sell for market. I don't think I need to put that in. You already know what it means. But for a limit sell, so say we want to have a limit sell of $460. So we'll do one stock. We'll hit review and see what it looks like if we place order. So now you can see for the limit sell, it says a limit of $460. So it's the opposite now, where it's saying don't sell my stock unless it's $460 or higher. So a limit order will always work in your favor, whether you're buying or selling a stock. But guys, that is the difference between market and limit order. Make sure you practice with limit orders. It will save you a lot of money in the long run. If you liked this video, again, smash that like button if you haven't already. Subscribe if you haven't already. And if you have any comments throughout this video, drop them below. As always, I'll see you guys in the next one.